I'm Randall from GoldenCare. I've been with GoldenCare 26 years, and it's my pleasure to be here today to give you guys a little bit of insights on what's going on and show you some tickets to success in 2023. And if you know me, you know I'm pretty passionate about long-term care, so I'm going to take care of some of the outside stuff first. Is that you can see on your screen, you should be able to see the GoldenCare agent on their website. You should be able to see our phone number. And on the right-hand side of the screen, hopefully you're seeing a lot of our tools that we have. It's just a sampling of some of the different agent tools we have. Most of you on this call are probably pretty familiar with GoldenCare, but if you're new and you happen to jump on, welcome. And hopefully you'll see that we have a lot to offer when it comes to the long-term, short-term, and senior market for you as we go through here. So I'm going to go ahead and move forward. And again, when I talked about the little intro, and I'll try not to get on a soapbox, which I sometimes do, is I'm really passionate about long-term care. I mean, when you look at long-term and short-term care, as people are getting older, there's a lot of gray hair in America. I've had the pleasure and the fortunate ability to be part of this group here at GoldenCare that has helped design products and has helped go out and educate people about long-term care and help agents help people. And I'll tell you what, when you look at the stats out there, it's still pretty scary, isn't it? 70% of the people out there, all the stats in different degrees talk about the fact that 70% of the people are going to need some type of care as they get older. But unfortunately, 90% of the people out there have never really had a really true conversation with somebody who really understands long-term care planning. And the really scary one is, of course, with the good old COVID that we've all known and loved so much these last couple of years. When you look at that last stat, 61% of the people out there that were in a survey said they had, during the heart of COVID, would rather die than go to a nursing home. It's pretty scary. It's pretty scary. And what that means is that consumers are obviously terrified ending up in a nursing home because they saw real life what happens. And some of the people, I've had two daughters who work in the industry, and they just said people are out there scared to death. They were so lonely. They didn't have family members to come and visit, et cetera. So we know that we don't buy long-term care to keep, to pay the nursing home as much as to keep people out of it if we can. So that's why what you do in the field is so important. And it's something that we really hope that you guys will embrace and you gals will embrace when we go out and try to give you the tools that you need to succeed and give you the products, hopefully, that'll really help you along the way as well. So I'll get off my soapbox like I promised. We got a lot to go over today. In a short period of time, because I know that these webinars sometimes drag on, and I tend to go through them pretty fast because I'm aware of that, so I apologize. I do want to let you know and remind you that you will get these slides, and so you don't have to sit and try to take notes on a lot of it, but you should be able to get the slides afterwards, et cetera, as well. So I'm going to keep moving forward. Starting out with where you'd expect on some type of an update webinar is the Washington Trust Act, right? We know that we have the Class Act. The federal government did the federal employee long-term care plan years ago. They try to enact things, about own your future and all these different things, partnership plans. So we know that Medicaid budgets are getting killed, and I could talk for a full hour on Medicare and Medicaid budgets and talk about the fact that if we don't do something, we're in trouble, right? We have a lot of gray hair in America, more old people in America than there are people in Canada. So we know all those stats. And some states are starting to take action. Whether it's good action or bad action remains to be seen, and we could have full webinars on that, which we've done as well. But, if you remember the Washington Trust Act, it's been around now, and there's been a lot of confusion. It's been in the news a lot. If you're in long-term care, you definitely have probably heard of it. Basically 58 cents on every $100 that somebody earns out in Washington as an employee, 0.58% employment tax that they put in place trying to get people to say, well, we'll offer you this great coverage then of $36,500 lifetime pool of money. So basically a really nice little baby plan out there, $100 a day for a year. And obviously that'll help for them to, get money in and not have to pay it out, which they're going to pay it out in Medicaid anyway. But the problem is it's just not a big plan, right? It doesn't do that good a thing. And if you're making a ton of money, let's do the math, 58.58%. Of $200,000 is a lot of money. So we know that people have the ability to opt out, and they had this opt out as a one-time opt out. They had all these dates changing all the time. Remember, I think where it stands right now, this is probably pretty accurate, as effectively July 26th, people are going to start out being eligible for benefits. They have the one-time opt out. Now they're considering stretching that in so you can have a longer opt out. And long and short of it, I could bore you to death with every detail, but about 500,000 people in Washington out of the 3.8 million, excuse me, opted out of that plan. So a little over 13% of the employee workforce out there did opt out. And they had a one-time opt-out, but they're obviously considering recertifying that, because it doesn't make a lot of sense to have people buy policies, and the carriers didn't love the fact that, so they're going to buy a policy and then they're going to end up walking away. So we know that that's something that if they do go through with this program, still an F, believe it or not, if it does go through, we're going to know that that program is going to have some adjustments and recertifications, et cetera. But Washington is the state that is the model act that most people look at. And there are a lot of issues: portability, what happens if I move out, what if I work out of state, all those different things, plus overall legality. Can I force somebody to go and pay a tax for something that they may not have or may not need, et cetera. So despite all the confusion with it, the big thing about it, there's carriers that jumped out of the market. We know the biggest mutual was one of the first to say, we're not going to deal with this anymore. We're not going to get saturated with all these sales, spend a lot of money and time on sales that may not stay in force, et cetera. So we had some problems. We got overloaded on the carrier side, overloaded on the agent side. But you know what? Tell you what, just that state of Washington, that act alone increased long-term care sales on the entire country for that year by 200%. So it shows that that thing really turned people's heads. People started realizing that I don't want to pay a payroll tax for something that I can go and get private insurance. So that's the good news on us, and that's what we're going to try to look for, is the silver lining. And we know other states right now are out there looking at the problem. And the problem is, when it's the states or governments in general, we tend to realize that most of the time we can't count on them as much as we'd like to, because they have good intentions, like with the partnership program, and the original ones in Indiana, in New York, et cetera. Those were great concepts, but they made the program to be inhibited to get people to go out and help themselves. So the partnership program as it is now in the other states is much better, of course. But again, sometimes the government doesn't always work out the way we'd like it to when they're trying to do a good thing. So we know right now, besides Washington, there's California, Minnesota, New York, and Pennsylvania are the 4 big states that are really actively looking into the payroll tax situation. And there's a lot of others on the watch list, as you see. Alaska, Colorado, Hawaii, Missouri, North Carolina, Oregon, and Utah are considered watch list states. And those states, hard to find any real solid things. And by and large, most of us realize we can get nervous, and everybody's like, oh, New York's, you'll get a notice right now if you buy a mutual policy that New York had a deadline of December 31st. So you can see there's a lot of hubbub about this, and everybody's trying their best to keep up. But at the end of the day, these are tough little programs. California and New York, are the biggest, huge population states. They have higher than average costs already. So it's going to be really tough for them to put something in place and have substantial coverage. So most experts think that it's going to get caught up in the stream, and it's going to be really hard to have somebody approve across the aisles to have something that's going to be a viable option for them. Minnesota and Pennsylvania also have some things on the table. Minnesota's got a couple different plan designs. And, the scary thing, again, I could climb right back up on that soapbox, and I could talk to you about the fact that what a good thing, if you think about it. These states are getting killed by Medicaid because they have to go back to Steve Moses and change some of those Medicaid laws in order to be viable and end up saving their states some money. But instead, they handle these like tax income opportunities, and they don't do it in the right way. Yeah, it's too bad. It always seems so obvious that if somebody went in and explained to them that here's how to put a program like this together, give people good tax breaks, give people the opportunity to self-insure, and I think it could be a win-win overall for a lot of people. So unfortunately, we know that doesn't happen as often as we'd like to. But again, what we're trying to talk to you agents about, smart agents are out there looking at what happened in Washington, looking at 500,000 just about apps come in a short period of time. It's time for agents like yourselves listening to this call to be smart and start educating those younger and healthier prospects out there about the ability to plan ahead and say, look at those states that are out there. You can use that as free advertising. Say, oh, you're out California, New York, Minnesota, Pennsylvania, or that whole other list of states I talked about. Tell you what, those states are taking aggressive action. They're starting to spend time and taxpayer dollars to look at this. And this is something that you can make hay on if you do it right and go out and tell people, let's plan ahead. You know what? You're healthy enough. Long-term care or a short-term care plan or something is really a good option for you to help you and your family and accomplish your ultimate goal. And you'll be able to avoid all this hubbub if your state comes along and puts something into place. So Again, the government may consider other things that will affect us as well. Moving on to some other things, this is a big thanks out to Mark Goldberg out there, who gave me some notes on some of the things he was looking at. But basically, he's looking at the opportunities and seeing what's going on there. Both chambers have introduced these bipartisan legislation to create these government-run retirement accounts, if you will, Roth IRA-style retirement accounts for workers, especially because we have so many workers now who don't qualify or don't have access to the employer plans out there. And obviously, the hope that we have in the industry is that they'll be able to be smart and let people use those funds to help get tax breaks to pay for long-term care expenses, or obviously to including long-term care premiums. So that's what we're really hoping. But at the end of the day, we do know that long-term care insurance and even the long-term care and life insurance or annuity hybrid plans out there, they still remain to be really push products. You got to push them out there. They're not going to have people run into you and pull them in. That's when we say push products. You still got to work at it. You got to go out and initiate the conversation. You got to go out and really show people why it's a value. You're not taking orders when you're doing these type of things. So any tax breaks or incentives out there that can come along, certainly they're going to help things out. And the need for a solution, the good news is for us, and the awareness that the solution is really needed, because we have a lot of gray hair in America, especially with COVID coming on, we know that that's going to continue to grow. So the good news is we're looking at the fact that I think the market is poised. Originally, I typed this in today saying, for significant growth and a huge growth spurt right in 2023. I've done this long enough that I didn't dare put the year in there and say it's going to be unbelievable. 2023, we're going to take off. But I do think that we're in for some really nice growth phase here in the next couple of years. I think this is going to be something we're going to see some really nice things with, again, the aging American with COVID. People are going to have a lot of those personal experiences out there, and they're going to see that this is something they really should plan ahead for. And believe it or not, the higher inflation interest rates we love so much can be a good thing for future sales. As the care prices soar, people start realizing that, hey, this is getting out of hand as far as taking care of myself when I get older. So we do want to make sure we go out and plan ahead. And the good agents like yourselves, hopefully on the call today, are beginning to see the importance of educating people that, they don't have to drive the Cadillac and Lexus plans out there. They can go out and buy a nice Chevy plan. That's the old lingo. You could tell I've been around for a while. I use Cadillac and Chevy. But they can go out and buy maybe not a Kia, but they can go out and buy a nice little plan that's going to offer them some great coverage. It's going to fold around and offer some co-insurance and take care of some of the costs. And it's amazing how little of the plan can help keep you out of a nursing home for a couple years. And it's amazing how often that we're realizing people are on shorter care experiences, so they don't need to have that big unlimited plan for long-term care like in the past that we sold so often. So the long-term care declines, let's face it, some of those rate increases on the old block of business, we all know. Those longer sales cycles for long-term care where they have to do all the APSing and take all the time to look into it, we know that what's caused bigger declines and a lot of not taken. So we're seeing that, especially with older folks, where a lot of people don't plan ahead and they all of a sudden have a couple health issues. And now we're seeing that those decline percentages and the amount of people who just aren't willing to pay the bigger ticket for long-term care sales out there are being noticed by really, really good traditionally long-term care and hybrid agents out there. So one of the things we're going to talk a lot about today for the rest of the time here is the alternatives that are out there and the development of stronger alternatives that's really going to really help expand and help our market. And the first slide out there, and most of you, this will be review. But again, we talk a lot about the fact that we really think short-term care, these plans are getting better and better. They're getting more and more noticed. The value of them is going up. And I really think they can help save the industry. And if you look at long-term care and short-term care side by side, you can see the blatant differences, right? Long-term care was the old traditional minimum 2 years, and we sold a lot of 3, 4, and 5s, and even those big unlimited plans, where short-term cares have a maximum 1 year. So it caps the individual risk for any one individual. Okay, and that's important, obviously, on the carrier side. The inflation can greatly increase that carrier exposure and risk. We saw that, right? That's why those legacy blocks of business had unlimited plans. People, when I started, were 72 when they bought the plans. Now they're 50, they're 55. and they're having these plans in the portfolio for years and years, growing at compound inflation, et cetera. So suddenly they have these huge plans that would have $1 million claims for some of these carriers. The limited benefit period softens the inflation blow to the carrier with the short-term care plans. And that means that we don't have those catastrophic claims. And that's really what kills those big blocks of business, is the small percentage of big claims that really knock it out of the park. And since this is a limited benefit period with short-term care plans, we see that there's no real catastrophic claims out there. So on the flip side, what happens when you have big claims and big claim potentials? We find out, guess what? Long-term care companies got smart. They ended up with much more stringent underwriting. And with the short-term care plans, because the risk is less, they can throw the net wider. And the big thing we already talked about were the long apps and big delays to issue. And now with short-term care plans, because it's a little simpler concept, it's a shorter app and there's very fast issue times out there that agents like as well. So this is all leading into the fact that, you know what, added premium needs to cover that block of business out there that's getting beat up. And when you don't have that, you can keep very flexible and affordable plans out there, keep them mean and lean. And really, the statistics out there at Claim Time are showing they're really helping people a lot more than we thought they would in the past. So that's why they're being such a big rave right now in America. Long-term care plans, obviously, the government got involved and made them very complex as far as certifications, the CE that was needed, the extra CE. So that we lost agents just for that fact, as we all know. And because short-term care plans are a simpler concept, they're simpler to have, and there's no special certifications, et cetera, for them. So in a nutshell, if I was going to sum it all up, short-term care really allows us to go back to the future, if you will, go back to the future and protect those older prospects like we did when I got into this industry, where we were talking to a lot of people in their 65, 70, 75 age who are out there getting policies, and now we see that they just can't do that. So a lot of you have been on some of my pivot presentations, so I'm going to go through this pretty quick. I didn't take a look at who was on the call today, but I know we have a ton of people signed up. And I know a lot of you have probably done this. So I'm going to go through this pretty quick as well, but I just wanted to give an intro in case some of you have never seen this. And I'll make this quick, and again, you'll get the slides. And this is a fairly easy concept for you. Basically, in the good old days, we talked about that pie chart you're looking at on your screen. We could go out and I could give a seminar. I've been blessed to be able to go out and give over 100 consumer seminars over the years. And we could go out there and really get people excited and show them, hey, if you need long-term care, we can help you, and we can help the vast majority of them with just long-term care. Then what happened in 2003, obviously legislation popped in, companies started seeing some of the claims experience, and we started seeing that companies tighten up the underwriting a little bit and said, we just can't have people get anybody who wants to get these policies, get them. So we saw that piece of the pie get a little bit bigger. And then we got to really where we are today, and this might even be a pretty forgiving pie chart. We know that people always have that box of medications in their shoebox, in their closet, where they have more and more medications these days. We know everybody out there is a pre-diabetic, quote unquote, which the underwriters, of course, know that means basically you're diabetic. The doctor just wants to call you pre-diabetic for a few years first and give you a bunch of pills to get you in line. And what we've seen is what you see on the bottom of your screen there. We've seen these huge decline ratios going up, and this might be, again, a little forgiving already, because we're looking at now 44, 45, 50%. And when you throw the not takens on there for the older folks over age 70, 75, tell you what, that number gets even scarier, right? A lot of people at that age, by the time they get the long process over with and they find out they did get the policy, you realize that they were just being nice and realized, oh, I wasn't really going to dare keep it anyway. It was pretty expensive. So we're seeing a lot of not takens as well, and we're starting to investigate that as well as agents and agencies. So, and the legacy block of business, nothing more probably needs to be said there, right? As we all know, that legacy block of business got beat up with the rate increases, and that caused people to get nervous, even though today's policies, because they're gender priced, because we got rid of the the unlimited plans, we don't have to worry as much about huge rate increases. But again, the public's a little bit gun shy, and we know that if we've been in the trenches. So in a nutshell, there's my little major sermon on that, is that we want to take that little pie chart that you're looking at your screen, and we want to make it look more like the old days, right? We want to be able to go out and say, if we're going to take the time, we don't get to go and send out mailers that get 8% responses anymore as agents, right? Leads are expensive. Believe me, we know this at GoldenCare. We have a career shop, very successful, but it's expensive. You got to go out and buy leads, and you don't get an 8% response like the old days. Now you get a 1.5, 2% response on the best days. So we know we want to be able to help as many people as we can when we get somebody to turn their head. And that's what we do as an agency, is give you tools to try to help you help more people. And that's when we talk about the paradigm shift. We talk about the fact that in the old days, we had whole companies and whole career agencies. Some of them fell flat on their face by doing the old thing of, I'm going to mail out and I'm going to get my 8% response and I'm going to go sell just long-term care. And if they can't qualify for long-term care, who's next, right? Now we see that that doesn't work as much anymore. So for the last 10 years or so, or 15 years even, we started educating brokers across the country saying you have to set the table. You got to tell people, you know what, if we can't get long-term care, which I just told you how great it is, if we can't get you that, then we have some other products we can get you that'll give you some coverage. And these are great products. But what happened there? We had people starting to look at it going, well, Tom just told me how great long-term care was. Now he's sending me the B squad, right? So we want to be able to go out there and try to do what we call feeding just about everybody. That's the big paradigm shift, is we want to change the way we did business for so many years. Start realizing the reality is you buy these policies with your health much more than with your checkbook. So we want to go in and try to say, when we get the opportunity to talk to somebody, let's have all the arrows in our quiver and the way to educate people about the fact that let's find out about your health first. And then once I find out about your health, I can go into my backpack and find something for you that's going to be a good solution for you and your family. So that's why we got in and started using things like the pivot presentation, and we have the referral program if you just plain say, I don't want to deal with this anymore. So if you happen to be on the phone or you're in that boat, let us know. We have a great staff that'll help you out and tell you about the referral program. But I do want to go in real quick. I'm going to try to exit out of this. And again, I won't spend a lot of time on this at all. I just want to show you that we have a pivot presentation. And this pivot presentation, if you haven't been on our website, I definitely recommend that you check it out. And basically, in a nutshell, what this is one presentation that does a little bit of warm up here, talks about some of the facts that you can go to or you can jump over, but everything you need to make sales and to help people is right in this one presentation. And again, I have full webinars talking just about the pivot presentation. It's actually a 2-part webinar, excuse me. And basically what I'm trying to show you here is that it has the most important part probably when you're selling online is you need everything at your fingertips. So you can click at any time in this presentation and go to this resources page and have instant links to anything you need for whether it's underwriting guides or whether it's financial information, tax information over here, calculators over here, all the e-apps and all that fun stuff. And then you can jump right back to wherever you were in the presentation at that time, okay? So that's the first thing I want to show you. And the other thing is just to show you, this will be changing a lot because of some of the things I'm going to show you in a second today. But basically, as you go through, you start talking about the process and say, first thing I want to do is find out if you can qualify for coverage. Then it goes into some health questions, okay? And from these health questions, I'm going to show you a tool in just a second that's going to show you just how strong it is. And I'm going to wait with that tool, but basically, this version of the pivot presentation has all the different underwriting guides right here, so you can quickly find out which company would take you. But we have something called our InstaPivot tool now that I'm going to show you in a few minutes today that makes this way, way too easy for you. And hopefully you'll appreciate the fact that now you'll be able to go out to somebody, start talking to them more casually as a conversation, open up the InstaPivot tool that we developed and go in there and find out exactly what policy is going to fit for that person as you're speaking to them on the phone. So whether you do a pre-screen before the call or whether you do it right on the spot, the InstaPivot tool, you make that possible for you. So once we find out where they're set, and again, I'm not doing a full pivot presentation today. Once we find out where they're set, then you'll see that this thing easily jumps you to whatever product fits well for people. So you can see these little blocks wherever you're at, there's going to be different products that you can jump to based on that. So that's the goal of the pivot presentation. You will have access if you're a GoldenCare agent, you're signed up and actively with us, and we'll get this tool to you. And hopefully you're going to see that it's just really, really valuable to help you out in the field and be able to pivot to whatever product you need And believe me, we've got some really nice products that are coming down the line that you're going to love the fact that we can do that with this. So I'm going to go back here. Now we're back to that screen that should show you the pivot presentation, just a screenshot, and the referral program. And, you know, those tools are great. And one of the things we saw, and it leads into my next area today, and I'm really excited to announce, I think, the product that's going to change the industry, because of the fact that one of the things we saw is that when you want to pivot to all these different people based on their health, there's a big string. And this is just a tiny sampling of obviously the products that GoldenCare has, where you can see the traditional long-term care and the hybrid plans in the upper left. And then in the middle, as you start sliding down, it's not worse products, remember, it's just they'll accept people that are less healthy. So as you go down the health spectrum, you can see there's other products like the short-term comprehensive plans, like the Aetna plan, the GTL plan, that are great policies. You have the GTL critical cash that we designed to help fill that gap for people who couldn't qualify for long-term care, all the way down to the ones that like are the GTL standalone home health care plan and the True Freedom plan, which is just a great prepaid home care plan. Again, I'm not giving a webinar on all these different products. I'm just telling you, we've got some great products in our portfolio. We call it our perfect portfolio. And when we started looking at this pivot concept, our team and I started looking at it thinking, what if? You know what if we could do something different? And if you know me at all, when I get my hands around something, and my team do, when we start designing something, we go bigger, we go home, right? If I'm going to design a new short-term care plan, I tell you what, I want it to have the best underwriting, the most flexible, the best coverage out there, the top commissions, and I want it to be affordable, right? Everybody wants everything they can get in it. And I'll tell you what, when you start looking at a plan like that, when I introduce the name of the plan, I always look at it saying there's a lot of big words that come to mind. You want this thing to be omnipotent, omniscient, omnicompetent. You want it everywhere out there. And that's why I'm really excited today to tell you, some of you, this is the first time you've heard about this. Our career shop knows about it. We haven't even officially released the name of the carrier yet. And I'm not even going to do that on this call today because of the fact that this thing's going to be officially released on February 15th. As of now, that's the date we're looking at, but we're doing some beta testing and a soft launch right now. And I'll tell you what, I'm so excited today to tell you about this Omniflex plan. And I'm going to show you just a quick little introduction to it today. And again, hopefully for some of you, it'll be the first time you've seen it, and you're going to see why we're so excited about Omniflex. Because when we designed this thing, we did want it to be all things. I really took 3 years so far that we've been working on this because we wanted this plan to do what no other plan out there could do. And some of the top alternatives are on your right-hand side. But we basically wanted to throw the net wide first. We needed to have good underwriting. So we have a two-tiered underwriting system that allows us to cover a lot of people. We wanted to have level premiums that didn't go up with age brackets. We know a lot of people are married, so we wanted to have spousal discounts. And we wanted to put a built-in RX discount so we can keep the net premiums lower than average out there. So when you looked at that, we also knew when it's a comprehensive plan, we had to have all the usual suspects on the facility side, right? We wanted to make sure we had the nursing home and assisted living and even hospice facilities, which most didn't cover. This is an indemnity type plan that covers all those things. And speaking of indemnity, since a lot of people have MA plans, we put in a hospital indemnity rider that people could have that would do a great job of covering those out-of-pocket expenses. More important than the facility coverage, though, we wanted to make sure we had comprehensive medical home care. We want to sell these policies to keep people out of the facilities if we can, right? So we need to have all the different types of medical home care services covered, from nurses all the way down to the different therapies. And we even, again, through hospice care in there, because most of the other policies didn't do that. And we wanted to have that there as an indemnity type basis as well. So those are indemnity benefits as well. And more important than the medical home care even, we know people want to stay at home comfortably. We want to make sure we have full home health care aid and custodial care services like homemaker and services, et cetera. So we wanted to make sure we didn't skimp on that when we came with the Omniflex plan. And we didn't do that. And we're excited about the fact that we have something nobody else out there has in the short-term care arena, true pure cash benefits. We know a lot of people are married. They want their spouses to help. They want family. They want friends. And I'll tell you what, we have the first day cash benefits built right into every one of these plans so that you have the ability, if you'd rather take that cash, we know how well that worked for us with Mutual's long-term care plan. We have the ability to have that first day cash as an alternative. So we're excited about that. And finally, this is a long-tail product. We know that we're selling these plans to hopefully some younger folks. So we needed to have inflation protection, not just on the facility, but also on home care and even on that cash benefit. So you can have a rider that gives you the ability to have those grow. So in a nutshell, you see where I'm going because of the visual, right? If you're tired of saying no to everything else out there, that's why we're so excited to introduce to you. And I'm really excited today because I know a lot of you on this call probably have never seen a taste of this at all yet. We're so excited to show you this Omniflex plan because finally we developed a short-term care plan that can change the industry. It's one of those that has wide underwriting, it's affordable, it covers you wherever you need care, and it has first day cash and inflation protection on top of that. So we really feel like we designed a plan that has it all, that has a wide net that I'm going to talk about in a few minutes when I show you just how flexible this policy is. So hopefully you'll see, like us, we can see the power of what Omniflex can do. And it starts with the two-tiered underwriting. So remember how we have home health care only plans out there, like GTL's got a great policy, and it's a super plan because it's so lenient on the underwriting. But it just has a few underwriting questions because of the fact they limit the home health care quite a bit, and they don't have facility benefits. So obviously it's much less risk for the carrier. So they have limited home health care plans that are very easy to get, and almost everybody can get them. On the flip side, you've got those larger full short-term care plans out there. And these plans we know have more knockout questions, and rightfully so, because there's larger and more comprehensive benefits, and some of them have inflation. So there's more risk to the carrier. What we did with Omniflex is we decided, let's have the best of both worlds. Let's have two tiers of underwriting. So we can have similar underwriting to the home health care only plans out there. And with that, to protect the carrier, we have facility and home health care maxed out at $100 daily maximum indemnity benefit, okay? And then there's no inflation available for tier one, okay? And this will make more sense when I show you the underwriting tool. And then with tier two, where we ask a couple other additional questions, much less knockouts you're gonna see than the other full-blown comprehensive short-term care plans out there. So we throw the net a lot wider than what you can get with that because of the way we designed the plan. But the good thing is you can get full benefits, you can get inflation, and you can get first day cash built right into that plan. So we really feel like the two-tiered offers the best of both worlds out there, and we're excited about having that in the Omniflex plan, okay? When we talk about underwriting, when I went through this originally, I designed an Excel sheet that showed all these different plans and all these different tools. And this is where I'm going to segue over and show you something we're really excited about that we should be able to release to you just about any day now. I know it's getting close. I've got my team on pins and needles. I keep telling them, fix this, do this, and get this ready to go out and be the best tool out there for agents. And I think we're getting really close to the mark. Because if you look at this, it looks confusing at first, but remember, it's a really powerful tool that basically has most of the products that we have. It has the best sampling of products that we have in the short-term care arena. We do throw traditional long-term care in. This is not built for long-term care. We are doing that as a day two project that'll show all the different long-term care policies out there and where that fits. But for now, it was more important for us to get these alternative plans and these peripheral products covered. So you can see we've got the True Freedom Home Care Plan on the far left here. We've got GTL's short-term home care plan next, and then we've got Omniflex short-term care plan that we talked about today that we're introducing. And then some of the other old standbys that have been great tools and will still be great tools. No one company wants to get all the business, right? So we want you to be able to choose quickly and find the best solution for your clients as you're on the phone with them. So we've got Aetna's up there, GTL's Home Care Secure, GTL's Critical Cash, Aetna's Recovery Care. These are the big dogs, right? Aetna's number one in the industry, I believe, for recovery short-term care plans, and GTL's Recover Cash plan is really getting to be exciting. I'll talk more about that later as well, but we have the underwriting for the GTL Recover Cash plan in here as well, which is another comprehensive short-term care plan. Okay, and I think you see where we're going here. Basically, in a nutshell, what I did with this, I have 45 different rows over here on the left-hand side that cover every question that's on all these applications, not traditional long-term care, but it does cover all the questions that are on all these other products, okay? And you can see if we start right out at the top, but if I typed in just ADL, for example, and I can have 5 different conditions up here, so I could have multiple conditions, but I just wanted to show you for ADLs, maybe we'll throw Alzheimer's in here too. I can just find it on the scroll down, or I can type it in there, whatever works best. And you can see over here, now it filtered on Alzheimer's, or I can do it on Alzheimer's and ADLs at the same time. Now there's 2 different conditions. So real easy to use once you get used to it. And I wanted to start with this one because this shows you really quickly, and I'm going to look at my time. All right, really quickly, you can see here that if you need assistance with ADLs, obviously nobody's going to be able to help you out there, right? Even the True Freedom Home Care prepaid plan isn't going to be able to help you there. But when we get into things like Alzheimer's, dementia, and cognitive impairments, you can see all of a sudden True Freedom says, yeah, you know what, we can deal with that. All the other carriers, including Omniflex, of course, says no way, we can't deal with that. So what I wanted to show you is that we have all the different conditions on here, and I can clear the filter at any time, and I can go down here and show, so for multiple sclerosis, now you can see True Freedom, of course, covers it, GTL's Home Care covers it, Omniflex covers it, Aetna covers it, but of course no on the traditional long-term care and the STC plans. So you can see here that we have some good coverage. You can even narrow this down by state if you want. You can say, I want just Alabama, and it'll turn green in the states that have it, okay? Traditional, again, we don't deal with in this, but for other products, Alabama is a viable option in all those states. So no more looking through to say which of my short-term care plans or policies will cover me in any given state. You now have the ability to go through at any time and say, where am I at and what states are available for any given plan. So that'll be really nice for you. And if you want to, you can even select the products if you want and narrow it down if you don't want to deal with some of the products that you don't offer for some reason. But again, the nice thing about this is that you can cover all the different conditions. Again, everything on the app's there. And what I want to show you today is on the summary, because I don't have a lot of time to go through this. But True Freedom, remember, that's a prepaid plan. Out of the 45 rows of all the different conditions that are covered on any one of these policies applications, it covers 44 of them. So obviously True Freedom does a great job. GTL's Home Care Plan, 43 of the 45 rows. Why? It's a nice little limited home care plan that doesn't pay a lot for home health aides, but I tell you what, it's great to have when you need it. So it's going to be a great plan to pivot to. On the flip side over here, you can see traditional long-term care for all the questions on these type of policies. Maybe you get 6 maybes. Okay, traditional long-term care is not where you're going to want to be for most of the conditions that are covered by short-term care. But you can see over here, even with Aetna's and GTL's recovered, we're looking at about 8, maybe. A couple of them aren't on the app that I kind of couldn't quite say yes to because I was thinking, boy, if they needed that, they probably wouldn't be covered for some other reasons. But I did a best job when we analyzed this. So right now we're looking at about 8 that would be covered by Aetna and GTL. And you can go down the line here and see all these different, some of these home care plans are pretty strong. What I wanted to show you today, obviously, because I'm a little bit biased because we're so excited about our exclusive Omniflex plan, that one has 32 yeses covered for Tier 1. And there's a little typo here for my team. If you're looking at it, we need a space there. 17 have full coverage, where you can get the full coverage of the plan for 17 of those 45 rows. So you can see compared to 8 over here, much wider net that we're throwing, and 32 compared to 8, much wider net. So you can see that's the ability and the beauty of the 2-tiered underwriting system. So you'll have this tool available to you. Again, today I probably just confused you more than anything, but I wanted to make sure you had the opportunity to see that, okay? So as you're going through the pivot presentation I showed you, and you have the ability to pivot, then you can see how strong Omniflex is. And I'm going to be really quick here just because I want to have full disclosure and transparency on how we designed the plan and why this plan works so well. Basically, when I sign somebody up on day 1, they buy what's called a base benefit. Tier 1 is limited to $100 per day, remember. Tier 2, we can get up to $400 per day on the facility and $300 per day for the home care. So very nice, big, robust plan for Tier 2. Tier 1, if they only get through the limited plan, they are limited at $100 per day. But the nice thing about this plan, and again, I say nice because you're going to see in a minute why this is so important, is we try to get rid of adverse selection for the carrier by having a ramp up. Now, it's not a ramp up like the other policy in the peripheral arena that has a 10% start and then 20% the second year. This one starts at a solid 50% of your benefit. So if you did $400 per day, it'd be $200 per day. If you did 100, it'd be 50. So it starts out at a lower amount, 50%, and then goes up in equal increments, 10% per year, until it hits your base amount, okay? So again, I don't want to beat you to death, and this is confusing first time you see it, but I'm going to show you. The beauty of this is twofold. Number one, it protects the carrier. If only tier 1 underwriting, it's 100% of the base, and that's as high as it goes. But remember, you can get 32 of those different rows covered out of the 45 for at least tier 1, where if you look over at, remember, Aetna and GTL's full-blown short-term care plans, those plans you can only get 8. So we throw the net a lot wider, so we have at least some coverage for people with the OmniFlex plan. But more importantly, most people who get the plan are going to be able to say, you know what, if I don't want to stick and I don't want to get inflation, if I get tier 2, I can decide not to get inflation. But most people are going to say, I got through tier 2 and I might decide to get inflation. We have a 2 times simple inflation, and basically it's 2 times max, and it's very affordable. And I'll tell you what, it ends up really being nice for people. It protects the carrier that inflation doesn't run rampant. It stops at 200% of the base. But more importantly, it really gives a nice, robust plan, doesn't it? And because of the way we designed the plan overall, we can have 17 of those 45 rows covered, where, again, with Aetna or GTL's full-blown short-term care plan, not ripping into those policies, I'm just showing you the difference. Though this plan covers a lot more people than those plans do because of the way we set it up to get rid of those first adverse selections. But I'm going to show you that. The key to this whole thing is that 5-year ramp up. That 5-year ramp up, because it does reduce the fact that you're going to get rid of some people who say, boy, I'm really in trouble, I'm going to need care next year. They're not going to buy this plan because they're going to go buy a policy that's going to pay more in the first couple of years, right? We don't want those people anyway. Truthfully, if I'm an agent, I want to say, I want somebody who's going to plan ahead enough where it's going to be 4, 5, 6 years down the line plus. So the ability to have that 5-year ramp up gives us so much more premiums at claim time. And that's the part we really got to do a good job educating agents about. As I finish up here, I just want to show you, when you look at claim time, look at the OmniFlex plan. Again, I was going to block out Aetna's name. I love Aetna. We do tons of Aetna. So I'm not ripping into Aetna. I'm just showing you the reality. If you look at a 61-year-old in Iowa, for example, and you look at this plan and have pretty much apples to apples, $200 per day, 360 days, 20-day elimination for facility. Then we do a $300 per day plan for OmniFlex for a year, and do their full-blown Aetna's home care at $1,200 a week, or about $171 per day is what that works out to be. If you look at those plans, you know what? Even the first day that I sell that person, $61 at 61, you already get the friends and family benefit, right? That we don't have with anybody else. So we get $75 even when it starts. And we have that prescription drug benefit in there. Remember, $300 potentially per year that you can have reimbursed right off the bat from day one with that plan. So you can see not only is our regular premium less, but you could have up to 40% less premium if you had the full $300 benefit. So really, really looking good. But a lot of the green the first year is over on the Aetna side, right? Rightfully so, because our plan hasn't started to mature yet. But look what happens as we go down the line. The most important thing to remember is when I sell a policy to somebody, I'm looking at the benefits at claim time, right? So now when I look at claim time 3 years later at age 64, tell you what, now we're looking pretty good, aren't we? Now suddenly we're looking at it going, boy, we got $120 per day for family and friends. We got $240 per day, and a bigger pool already in the third year on the home health care side. I haven't got up there on the facility side yet because we haven't fully matured. But once we hit 5 years, this plan fully matures. We've got equal benefits on the facility. We saved a ton of premium dollars, and we've got a lot bigger benefits on the home care side, 73% larger home care pool. So I just want to show you, that's the power of understanding how to do business. And we have real simple tools to use and a nice online e-app and everything else for OmniFlex that you're going to have the ability to use. But the key is with it is you can feel really good. And it's not just the 61-year-olds. This works for almost any ages. And we have tools and a team that can really help you decide what's the best way to go. So I do want to let you know, it really shines well against those full traditional short-term care plans that are in the industry. But the OmniFlex plan really shines really well against the home health care only plans, especially those plans that have limited home health care aid benefits or no family benefits at all. Because if you look at the stats, we all know them, but this slide will be something you can reference. From 2015 to 20, unpaid caregivers are out there en masse, right? En masse, we have tons of people out there who are helping people on a voluntary basis. And even if you look at paid caregivers, 53% of them out there are turning to home health care aides, right? They're not turning to nurses and therapists as often. They mostly need somebody to take care of the custodial care. So you got to have that type of coverage, and you got to have it strong in your policy. CNA, same thing. Basically, certified nursing assistants help with meds, but they basically do the same type of thing on the home health care aid side. And then even family, friends, and independent paid. These are paid caregivers you can see there with the family and friends, okay? So finally, one of the other things I talked about is how short-term care can save the long-term care industry. These slides are more for you to see in the future, but I'll tell you what, when I looked at Omniflex, I started realizing that when we look at the older folks, age 70, look at this 70-year-old in Arkansas. If I look at a 70-year-old in Arkansas, we know one thing is going to happen, right? It's going to be expensive for long-term care. And we know that there's going to be a pretty good chance that they're not going to qualify for coverage, right? If we look at the stats out there, we're looking at, boy, 40% are probably going to get turned down, and a lot of those aren't going to take it. So we know there's going to be a bigger issue when you get to 70, 75-year-olds plus, right? But look at this 70-year-old. If I sell an Omniflex plan with $300 per day, I'm going to keep this a really affordable little plan for this person. Mutual, custom LTC plan, $100 per day for a couple of years. 30-day elimination is the lowest they have. Lowest they have in Arkansas instead of 20. And then we have the home health care benefit at $100 per day or $300 for Omniflex, okay? Again, you'll look at these slides later and be able to go through all the numbers. But all I wanted to show you is, look at this. Even the first day I sell them, before our plan starts to mature at all at Omniflex, and again, Mutual is my plan. They don't like us to say we helped develop it, but we did. Mutual is a great policy. It's the #1 in the industry for long-term care. All I'm showing you is how strong these short-term care plans can be. We love Mutual. It's still where we buttered our bread for years and years. But look what happens when you get to this older person. Up to 7.4% less premium. And then even 3 years later, all that green is over on the left-hand side, right? You can see there, 5 years when we fully mature, look at how strong this Omniflex plan is. Remember, long-term care plans at $75,000 you see, that's one pool of money for this person. They use it whether it's in the facility or home care or cash, but it's one pool of money. It's not separate pools of money. With our policy here with Omniflex, we have 188% greater pool because we have 108,000 for home care plus 108,000 for any given care period for facility. So we have the ability to have 188% more for less, for about the same premium or less premium. Okay. So that's all I'm trying to show you with this. And we have another example here I put in here just so that Lynn would make sure she sent it to you. But here's even a plan where you start putting inflation protection on this thing and it blows it away. You have less premium, and down the line, when you look at 15 years down the line, you're looking at 182% bigger pool of money. Look at those daily benefits, $450 per day. All we're doing is people say, well, yeah, but short-term care is only a one-year plan. But remember, folks, if you're getting 3 times the money in that first year, you can take that money and say, you know what, sock it away somewhere if you want to spread it out, but pay for all your expenses now and get it while you can, because the pool of money is what counts. And when you're looking at 182% bigger pool of money, that gives you a lot of value. And even just home care standalone would be 162,000 versus 115 if you put inflation on. So in a nutshell, I'm just trying to show you that's the power of what we offer here at GoldenCare. And we really feel like 2023 is going to be the year to help make more money. The industry, I think, is primed for it. We have Omniflex set up where it's going to be official launch in mid-February. We've got our updated pivot presentation that we're going to have Omniflex in there, but we're also going to have some other things in there as well. Some of you maybe already have an older version of it, but the Insta-Pivot underwriting tool is going to be available before that. And the great news is we've got some cool stuff coming, man. Tell you what, look for another, maybe 2, but for sure 1 brand new short-term care plans that we're helping a carrier design that we're really excited about. That's going to be a really nice niche in the industry. And I think you guys are going to see, and we'll put it into our tool so you'll have access to it in the pivot presentation. It'll be able to pivot nicely to it. But that one is a great one. So can't say anything more about it now, but I'm really excited about it. And some of you may know there's a great existing short-term care plan out there right now that's going to come out with some really great improvements in the year to come here. So that's all coming up down the line. We're really hoping there'll be 2 new short-term care plans actually that we have in the works. And plus, we'll cross our fingers a little bit on this one, but we're working diligently. Mike Lynch is probably going to cringe if he's listening, but we are trying to help develop a completely new long-term care concept design as we speak too. We're in the very early stages, even, sharpening our pencils to see how viable it'll be. But I'll tell you what, if this thing works, it's going to be something that'll take the industry by storm as well. So we're really excited about that. And you guys as GoldenCare agents and people who are associated with GoldenCare, obviously, be the very first to hear about those and have the first access to them as well. So as we're talking about money, tell you what, let's give away some money right now. I know I probably went well over my time. I'm sitting at home, so I don't have a clock that I'm looking at besides my cell phone. But I do have the 3 $100 Amazon certificates. If my team starts texting me saying, Tom, you're nuts, that's not how we're doing it. We'll find out. But anyway, basically here we have a list of all the people's names on here who are attended. You do have to be on the call still, so hopefully the name pops up by now. I've seen it for a second or two, but Greg C, congratulations. And if there's more Greg C's, we'll make sure we contact you. But hopefully you know who you are. And I'm going to click it again for the second one. This is for a $100 Amazon gift card just for attending today to say Happy New Year. And I don't know if we can have multiple winners. Yeah, it came up as Greg C again. So what I'm going to do is I'm going to click it again. I'm going to let my team who has done this in the past decide if Greg C gets both of them. For now, I'm going to say he should, but let's see if it pops up Greg C again, and I have a faulty flippity wheel here. Hold on. Nope, it isn't. Hopefully you can see it by now, and it's live. April H. April H is the next one. And I can't chew gum and read my text at the same time. So what I'm going to do is a safety draw here in case they say, nope, it clearly states in the rules, Greg C can't win both of them. I'm going to click one more time and apologize to this next person if Greg C got both of them. I just don't know the rules my team put together, and I don't want to break them. So Paul D is the winner of the third or fourth one if we're going to do it. And maybe I'll be nice and just let Paul D win one as well, even if we give 2 to Greg C. So that's probably the best way to go. Let's plan on giving Paul D one as well, just because I didn't have time to learn the rules of our contest. So I do want to tell you, I really appreciate taking the time to do this, to get on here. And I'm sorry I went a little bit long today. I'm sitting at my house. I had a lot of other materials that I planned on putting in and having a little more streamlined today, but I realized that from home I can't get into some of our network files. So I had to kind of wing it on a couple of areas today, and I wasn't sure of my timing, so I apologize about that going long. But the key with it is that even though I didn't put it in that slide that 23 is going to be a banner year, truthfully, I know, and my team has heard me say it on our daily marketing calls, 23 is going to be a banner year for GoldenCare, and we want you to be part of it, because 23 is going to be a year that I think we do change this industry. I think we start doing things in a smarter, more viable way to keep you guys out in the trenches happy by saying, you know what, when you get leads, you're going to have the ability to go out. Every person you talk to, we have a viable solution. Open up your minds a little bit. Look closer at that True Freedom Plan. You know what? That thing is a great policy to have. It's not a long-term care or an insurance policy, but it's a prepaid home care plan that dollar for dollar just kicks butt and takes names, even for people who are more healthy. But you know what? The best thing is it's there for anybody because it's not an insurance policy. There's virtually no underwriting. So hopefully you guys are going to see that this is something that we really can do a good job with. So I'm getting texts. I'm trying to look and see if there's something like you've been off the air for 10 minutes, but I hope that's not the case. But if you can still hear me, this is Tom Randall. I want to wish you a very, very Merry Christmas belatedly, obviously, and a Happy New Year. And let's really go out and help people. There's so many Americans with so much gray hair out there. We love to have the opportunity to help you, help more people. So reach out. We've got the best team in the industry, in my mind, all by side. Our regional directors and our marketing support are second to none. And we've got so many great tools, ability to have strat decisions at any time. Plus, I'm working hard behind the scenes developing these new products and helping develop, working with carriers and having a ball with that. And I think we're going to really be able to do some good things together in 2023. And it's going to be my pleasure and privilege to be there and help you get that done. So this is Tom Randall for GoldenCare. Thank you very much for attending. And we should have, within a day or two, the slides out to you like we promised. and the other vouchers, etc. So thank you very much, everybody. Appreciate it. You have a great day.
Check out our website, goldencareagent.com, or give us a call at 800-842-7799.